Hello everyone and welcome back to the channel. It is Tuesday, July 1st, 2025, and what a fascinating time to be in the crypto markets. We are kicking off the second half of the year, and the question on absolutely everyone's mind is simple: was that it? Was that the cycle top we saw a few months ago, or is this prolonged, choppy price action just the market taking a deep breath before the next explosive leg up? Today, we're going to break it all down piece by piece. We'll look at the major players, the macroeconomic storm clouds gathering on the horizon, and the key technical levels that could decide where we go from here. It is a market balanced on a knife's edge, and you are going to want to stick around for this one. But before we dive into the charts and the nitty-gritty details, let's get the essential disclaimer out of the way. Please remember, I am not a financial advisor. This video is for informational and educational purposes only. The cryptocurrency market is incredibly volatile, and you should always do your own extensive research and consult with a professional before making any investment decisions. Never invest more than you are willing to lose. My goal here is simply to share my perspective and analysis to help you become a more informed participant in this wild and wonderful space. Now, with that said, let's get into the state of the market. Right now, if I had to describe the overall market sentiment in one word, it would be apprehensive. The Crypto Fear and Greed Index, which gives us a great snapshot of investor emotion, is hovering right around the 48 mark, smack dab in the neutral zone, but leaning ever so slightly towards fear. This is a far cry from the extreme greed we were seeing back in the first quarter of this year when prices were screaming upwards. For the past 6 weeks, we have been locked in a sideways consolidation pattern. It's a classic tug of war. The bulls are pointing to strong on-chain fundamentals, continued institutional adoption, and the long-term deflationary nature of assets like Bitcoin. On the other side, the bears are looking at the shaky global macroeconomic picture, the looming threat of coordinated global regulation, and the technical chart patterns that suggest exhaustion. This indecision is palpable. Volume has been slowly tapering off across major exchanges, which typically precedes a significant move. The market is coiling like a spring, and the big question is, in which direction will it snap? So let's start with the king, Bitcoin. As of recording, Bitcoin is trading at approximately $95,650. Now, for anyone new to this space, that might sound astronomical. But for those of us who watched it climb to over $120,000 earlier this year, this represents a significant, and frankly, nerve-wracking 20% pullback. This $95,000 level is psychologically massive. For weeks, it has acted as a formidable line in the sand. Looking at the technicals, Bitcoin is currently wrestling with its 50-day moving average. Think of this moving average as the market's short-term memory of the price. We've seen the price dip below it, only to be bought back up, and poke its head above it, only to be sold back down. This is the very definition of a battleground. The bulls absolutely need to see a decisive daily and, ideally, a weekly candle close above this level, which is currently sitting around $97,000 to regain control. If they can achieve that, the path towards retesting that $100,000 psychological barrier opens up. However, the downside risk is just as real. The major support level that everyone is watching is the $90,000 mark. This level has held strong on multiple tests over the past month. If we were to see a breakdown in a daily close below 90,000, the next logical stop would be the 100-day moving average, which is currently all the way down around $84,000. A drop to that level would likely cause a cascade of liquidations and spark widespread panic, potentially pushing us even lower. On-chain data is giving us a mixed bag as well. Long-term holders, the so-called diamond hands of the market, are largely still holding strong, which is a bullish sign. They are not being shaken up by this volatility. However, exchange inflows have seen a slight uptick over the past 48 hours, suggesting some short-term holders or miners might be moving coins into position to sell, perhaps in anticipation of negative macro news. This brings us to the elephant in the room, the macro environment. This Thursday, we have the release of the latest Consumer Price Index, or CPI, data from the United States. Inflation has been the ghost in the machine for the global economy for the past few years, and this release will be critical. If inflation comes in hotter than expected, it could force the Federal Reserve's hand, signaling that interest rates will need to stay higher for longer. This is typically bearish for risk assets like Bitcoin, as it makes safer, yield-bearing assets like government bonds more attractive. Conversely, if the CPI data shows inflation is cooling faster than anticipated, it could be the bullish catalyst the market is desperately craving, sending Bitcoin and the rest of the crypto market soaring on the hope of future rate cuts. Everyone is holding their breath for this number. Now, let's shift our focus to the queen of crypto, Ethereum. ETH is currently trading at around $6,820. In many ways, Ethereum's chart looks very similar to Bitcoin's. It's been in a period of consolidation after a spectacular run-up. However, there are a few key differences. Ethereum has shown slightly more relative strength during this downturn compared to Bitcoin. The ETH/BTC ratio, a key metric for determining which asset is leading the market, has been slowly grinding upwards. A lot of this strength can be attributed to the ongoing narrative surrounding Ethereum's utility and its upcoming Prog Electro network upgrade, which is slated for the fourth quarter of this year. This upgrade is highly anticipated and promises to introduce several Ethereum improvement proposals, aimed at enhancing the network's scalability and efficiency, particularly through features like Verkle trees and potential improvements to staking. The market is front-running the excitement for this upgrade, with significant amounts of ETH continuing to be staked on the network, effectively reducing the available liquid supply. This supply shock dynamic is a powerful bullish undercurrent for Ethereum. From a technical standpoint, Ethereum is also battling a key level. It's trying to reclaim the $7,000 market support. A firm hold above this level would be incredibly bullish and would likely signal a move towards its previous all-time high of around $8,000. The main support to watch on the downside is the $6,500 level. This area has been a floor for the price for over a month. A break below $6,500 would be a major bearish signal and could open the door to a much deeper correction, possibly down to the $6,000 psychological level. It's also worth noting the activity on Ethereum's Layer 2 scaling solutions, like Arbitrum and Optimism. Transaction volumes on these networks continue to grow exponentially, which is a testament to the thriving and expanding ecosystem being built on top of Ethereum. While this doesn't directly impact the ETH price in the short term, it solidifies Ethereum's long-term value proposition as the foundational settlement layer for a decentralized internet. Next up, let's talk about Solana, a high-speed, low-cost blockchain that took the market by storm. SOL is currently trading at $210. After an absolutely meteoric rise from the depths of the bear market, Solana has entered a much-needed cooling off period. This chart looks perhaps the most precarious of the major large-cap coins right now. It has been forming what some analysts are calling a descending triangle, which is traditionally a bearish pattern. The key support level for Solana is right at the $200 mark. This is a huge psychological and technical level. It has been tested multiple times, and so far it has held. If the bulls can defend this level and force a breakout to the upside of the triangle pattern, we could see a very rapid move back towards the $250 resistance. However, the risk is that this $200 support finally gives way. If we see a convincing break and close below 200, we could see a swift drop to the next major support zone, which is around $175. The primary headwind for Solana remains the narrative around its network stability. While it has made huge strides, the network has experienced intermittent periods of congestion and slowdowns under heavy load. The developer community is actively working on solutions, but in the current risk-off environment, any news of network instability could be seized upon by bears. On the bullish side, Solana's ecosystem continues to flourish, particularly in the areas of the PI and decentralized physical infrastructure networks and meme coins, which continue to drive a massive amount of on-chain activity and attract new users. Solana is in a crucial phase of its development. It needs to prove it can be as reliable as it is fast. The next few months will be a major test for the network and consequently its price. Finally, let's touch on XRP. XRP is in a world of its own, as it so often is. It's currently trading at around 85 cents. For what feels like an eternity, XRP has been trapped in a massive long-term consolidation range, largely between 60 cents and $1. Its price action is less correlated with the day-to-day whims of Bitcoin and Ethereum and is much more sensitive to news related to Ripple's ongoing legal battles and its adoption for cross-border payments. The good news for XRP holders is that the legal clouds from the SEC lawsuit in the United States have largely dissipated, providing a degree of clarity that was missing for years. The focus now is on global adoption. We've recently seen positive news out of the Asia-Pacific region, with reports of a major banking consortium in Southeast Asia successfully piloting a CBDC, or central bank digital currency, project using the XRP ledger for wholesale cross-border settlement. This is the kind of real-world utility news that gets the XRP community excited, as it validates the core use case for the asset. From a technical perspective, XRP is simply coiling for a massive move. It's like a beach ball being held underwater. The 80-cent level is serving as strong support, while the 95 cent to $1 area is the major ceiling that needs to be broken. A definitive breakout above $1 on high volume could trigger a truly explosive rally as years of pent-up energy are released. Many long-term chart analysts believe XRP is on the cusp of a major repricing event. The key risk, of course, is that it fails to break out and simply continues its sideways chop, frustrating investors and causing capital to rotate to assets with more momentum. For XRP, it's a game of patience. The fundamental case is slowly being built, brick by brick, but the market is waiting for that one definitive catalyst to light the fuse. So to tie it all together, where does this leave us? We are at a critical juncture. The entire crypto market is bracing for impact from the CPI data on Thursday. This single data point could be the deciding factor that pushes us out of this consolidation range. At the same time, we have whispers of a new regulatory framework being discussed at the global level, something being dubbed the Global Digital Asset Accord or GDAR. Details are scarce, but the market hates uncertainty, and the idea of a coordinated, restrictive regulatory push is putting a damper on sentiment. On the other hand, we continue to see positive institutional news, with another major global investment bank announcing last week that they are expanding their tokenization division, aiming to bring real-world assets like bonds and real estate onto the blockchain. This is the long-term bullish thesis playing out in real time. So, here is your forward-looking statement on what I'm personally watching for. For Bitcoin, I am watching for a weekly close-up of $97,000 to confirm a bullish continuation, or a close below $90,000 to signal a deeper correction is likely. For Ethereum, the key is holding that $6,500 support. As long as it stays above that, the bullish case for a run towards its all-time high remains intact. For Solana, it's all about defending $200. A break below that would be a major red flag. And for XRP, we're all watching for that breakout above the $1 resistance. The next 72 hours are going to be absolutely pivotal. My advice is to remain level-headed. Don't let fear or greed dictate your actions. I have a plan for both a bullish and a bearish scenario. Know your key levels of support and resistance. The volatility is likely to ramp up significantly as we approach the CPI release, so be prepared for some wild swings. This is the nature of the crypto market. It's a high-stakes game of three-dimensional chess, played against a backdrop of global economics and rapidly evolving technology. It is not for the faint of heart, but for those who are informed and prepared. The opportunities remain immense. That is all I have for you today. Thank you so much for tuning in for this deep dive into the state of the market. I hope you found it valuable. If you did, please consider hitting that like button and subscribing to the channel so you don't miss our future updates. Stay safe, stay informed, and I will see you all in the next video.